Welcome to The Interest. I'm Christine Stewart. Boy, has it been a busy few weeks. Everyone's going to be keeping their eye on Jackson Hole, Wyoming this week, where Fed Chair Jerome Powell will be speaking and perhaps hinting at what will happen with the Fed funds rate. Later on in the show, we're going to hear about David Luna's predictions for what the future holds and why it's a good time to be an LO.
My name is Thomas Hall. I went ahead and used the Sunwest AI app, and I put in a difficult loan scenario with some tax returns and everything, and I had somebody else already underwrite it. When it came back, it was almost identical within like a few dollars, and it took about 30 minutes instead of a whole day or two for somebody to analyze that. So yeah, that AI is going to be the best thing in the whole industry. So stay tuned.
Welcome back. Here are your headlines for today, August 24th. Fannie Mae's ESR Group foresees challenges in the housing market, regardless of the economy's trajectory, with mortgage rates and inflation playing pivotal roles. The economy is performing well, but the group is still predicting a recession in the first quarter of 2024. The housing market remains a trouble spot, with an ongoing tight supply of existing homes for sale and the recent rise in the 30-year fixed-rate mortgage to around 7%. Economists expect 2023 home sales will remain near the lowest annual level since 2009. In other news, LoanStream is now offering second mortgages for non-QM loans, including DSCR and ITIN, so real estate investors can take out a lien on their home in order to afford their next down payment, rather than doing a cash-out refinance. Those investors can then get a blended rate much closer to 4% versus taking out a new first loan, which would land the borrower with a rate of closer to 6 or 7%. Eventually, either after paying off some of the loan or when rates come down, which could happen sometime in the next year, the borrower can combine the loans into another first mortgage. It's a good time for DSCR and non-QM, which are experiencing higher origination volume this year. That's just one of the announcements made at Originator Connect last week. Did you miss it? Well, you're going to want to start planning for next year because LOs got a lot out of the event. Let's hear what some of them had to say.
I like getting together face-to-face with all of our partners in the broker industry, learning about what they can do, what they won't do, and figuring out a lot of problems that we run into when we're on the origination side.
There's nothing like the excitement of the exhibit hall floor at Originator Connect. Loan officers and real estate agents were networking their way to success.
The main reason I came was to meet Pavan with SunWest Mortgage and to learn more about the Angel AI.
Pavan Agarwal, CEO of SunWest Mortgage, was one of the presenters at the conference. He was just one of the many big names, which included Rocket Pro TPO's Mike Fawaz, Nexa Mortgage's Mike Cordes, and Tuan Nguyen of Loan Factory, along with the National Association of Realtors' Lawrence Yun.
I really enjoyed seeing Tuan's journey and his story. Same thing with Mike Fawaz. It's really cool to see these people who aren't from this country originally really rise to the highest heights in this industry. So it's been really cool, motivating.
I didn't think it was going to be this great, to be honest, and it's been very informative, new products, new companies, and it's just more accessible than ever.
Torres says she just found a loan that she couldn't find before and closed a deal while she was at the conference.
Got a lot of really good information for new loan originators.
Valdez says getting information from the largest conference of brokers in the country will only up his game. Reporting for The Interest, I'm Sarah Wolak.
Thanks, Sarah. It was a really exciting event for sure. One of the people there was David Luna, and when David talks, LOs listen. So let's hear what he has to say.
There is a softening of jobs, and with the CPI numbers only coming in at 3.2, yes, it's higher than it was last month, but you've got to look into the numbers to see the real changes. These are all good signs that the Feds may be done raising the Fed funds rate. Americans with credit card debt just passed $1 trillion. Now that's with a T. The Fed funds rate going up is causing credit card interest rates to also go up. It feels like a perfect storm. When rates drop and borrowers have all this debt and equity, it will be a great time to be an MLO. Mortgage delinquency has fallen to its lowest level in over 40 years. So let's understand the numbers better. The Consumer Price Index for all urban consumers rose 0.2% in July on a seasonally adjusted basis. The U.S. Bureau of Labor Statistics reported. So yes, the number was slightly higher than the month before. However, once you strip out rent, which is what the Fed has told us they want to focus on because of the lag in rent data, the growth rate of inflation is definitely falling. If we remove shelter, which is about 40% of the total CPI number, it looks much better. What we are doing is we're looking at rents from a year ago where rents today are much less. Look at your communities. Get in your car, drive around. The only construction you see is multifamily. With more of these apartments coming online, shelter costs have lowered. Rents have been dropping since last October. Rents are not the same as when these people originally signed their agreements. NAR, the National Association of Realtors chief economist, Dr. Lawrence Yun wrote, quote, "More jobs were added in the past month, but more recently, the pace has markedly slowed down. The 187,000 net new payroll jobs created in July and the 185,000 created in June are the slowest 2 months of job additions since the start of the COVID lockdown well over 3 years ago," close quote. Again, remember, we need borrowers to have jobs so that when mortgage rates come down, and they will, that they will be able to qualify for refinances that we will be doing, in my opinion, before the end of this year. I am Dave Luna for Mortgage Educators in Compliance, and we'll talk to you again soon.
Thanks, David. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.